Good morning, everyone, and welcome to the Quantum Leap Morning Leap session. This is our pre-market trade plan setup session where we take a look at the market, macro to micro, take a look at the structure of the market, determine where our trade levels are going to be, what our targets are for the day, and what our main hypothesis is. It is Tuesday, November the 17th. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Quantum Leap Futures is a live trade room. We do these pre-market sessions, and then we do live trading and analysis during the course of the day. I'll post the contact information in just a minute. Of course, we've got to do the disclaimer, so please read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own trade metrics. If you do want to come in for a free trial, send me an email at quantumleapfutures@gmail.com or send me a Skype contact at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, you can always call me on the cell. I love talking about the market. And if you like these videos, you can find probably close to 300 of them now on YouTube. Just do search Quantum Leap Futures. And of course, if you like what we do, please follow me at Crazy2 on Twitter. Okay, so yesterday we were looking at a rotational day, and above 1750, my bias was a rotational day with an upside bias, and below 1750, a rotational day with a downside bias towards closing that gap at 2008.50. And the overnight low down at 1998.50. We had a very strong open. Now, the interesting thing yesterday, and one of the reasons I stayed long, and just kept on trying to get long until it finally worked, was the fact that our opening 15-minute range, our opening 30-minute range were both positive bars, and that had a 75 to 76% probability of being broken to the upside. Then we put the IB in as well. So we had 96% probability of a IB being broken to the upside or the downside, but the RB3 breakout statistic and the opening range 15-minute breakout statistic was still pointing to the upside. So coupled with the 96% probability of the IB being broken to one side with the fact that we have strong 75, 76% probability on the other two stats is what kept me trying to get long. Of course, at 25, they were just hammering it. Sellers kept on stepping in, kept on stepping in, kept on stepping in. We finally got back above the VWAP and then finally went up, and we had a very late IB break, and then once they broke, they just ran and ran all the way up into 51. Now, there's no surprise that we had some resistance up here in the 51 area. Remember that our microcomposite value area low from the area that we just fell out of was at 2051 and a quarter, and our key line in the sand was that 2049.75. So you had two key levels there, but we went from a rotational day, and then we once they broke and the sellers ran out of inventory, they just trended it all the way up the rest of the day. You can see higher fractal lows, higher fractal highs, and it was I took the rest of the day off. I was done by 2 o'clock and went and did yard work. It was a gorgeous day. All right, so let's take a look at, I always start my day taking a look at the macro to the micro, using a simple candlestick chart with a 9 EMA and a 20 SMA, looking for slope and separation and where the trend is being, challenged or broken. And we talked about the fact that we are coming down yesterday, and we came down and was testing the 20 SMA, and we were saying, well, if we can't hold it, then we're violating the trend and we could look for some more downside. We held it, we've bounced, we're now above the 9 and the 20, so the trend on the monthly remains intact. On the weekly, we came down, we actually, closed last week below the 9 and the 20, and then they popped back up so far yesterday, and we're holding above. More consolidation. We've actually got a possible cup and handle here going on. Let me just check this out here for a second. All right, we do have a cup and a handle. What's our extension? I take the moderate. I don't take the buying tails. All right, so we have a wow. The weekly is giving us a possible extension up into the 22.36. I highly doubt that this is going to happen going into the year end, but it's something that we have to pay attention to. And this pattern stays intact until we get back below 1978, 1975 area. That's interesting. Just a quick look at that. It's a little sloppy, but it's still a valid pattern. Okay, going to the daily. So we're calling it consolidation on the weekly. On the daily, we had this nice strong uptrend, and then we had Mr. Sneaky right here. We rolled over, okay, violated the trend, started a downward trend, and now we created this technical gap. We closed the tech gap so far. We do have a naked cross on the daily up here at 2064.50. So keep an eye on that. Mark that down in your journal. If we get above this 9 EMA at 56.75 and hold, look for them to come up and take out this naked cross here. I'm going to show you on the geometric chart as well what I'm looking at in just a couple minutes. But right now, the downtrend is being challenged but not violated on the daily. On the 4-hour, we had this strong downtrend that was accelerating, getting slope and separation, created the technical gap, came up, closed the tech gap on the 9, came up, closed the tech gap on the 20, and now we're above the 9 and the 20, and we're starting a possible trend to the upside. We do have a naked cross below us at 20.40 and a quarter, so mark that one down as well. But the trend itself is we've got a start of an upward trend on the 4-hour. Now, as we move down the time frames, you can see that 4-hour on the 1-hour is become a pretty good trend, slope and separation. We just closed the technical gap. We're losing a little bit of separation, but not the slope yet. But we are holding above the 9 and the 20. The 20 is down here at the 49, near that key line in the sand that we were looking at. I'm actually moving my line in the sand down, and I'll show you where and why in just a minute. And going down to the 30-minute, okay, we've lost slope. We do have separation. The trend is being challenged, but not violated. It's holding above the 9. We're back above the 20 right now, but it is weakening right now. And then going down to the 15-minute, same thing. We had a violation of the trend. They popped back up, and we're coming back down and testing this. We closed this naked cross. I had this one marked as well at 54, so I can take those off my list. All right, and we do have a new one that we put in down here at 50. 50 and a quarter on the 15-minute. So trend is weakening, more consolidation on the 15-minute. And last one is down to the 5-minute. We had that pop on the news, and now they created the technical gap, came down, closed the tech gap, and so far we're holding above. They closed this I would consider this to be a closed naked cross. It didn't quite make it there, but we did retrace almost all the way back. You can mark it down at 54.75, but the low here was 50. It's basically closed. So no real trend coming into the RTH on the 5-minute. So I do want to look at the geometric chart. We were talking about, we have this larger downward sloping fork, had really nice frequency on it, failed to break above and started moving down. I had the opposing upward sloping fork that we broke yesterday, as well as the smaller time frame. This is a fork on the 30-minute, this one right here, and we had broken out of the upward sloping fork and then broke down below the smaller time frame, and then we retraced back up, and we had this energy point right here, okay, at the 2039, 2040 area. Took that out, continued up, and so far we've tested the upper line of the smaller time frame downward sloping fork. There is this energy point right here at 49. We could come down here, but this is my possible retracement level that I'm waiting for them to work their way back up, this energy point here. We're currently inside of the upward sloping fork again, so I'm looking for them to try to make the move up. If we break out of the downward sloping 30-minute and get above this 2059 area, then we should get a move up today into 71 to 79 area. 78.50, of course, is the one that I'm really looking at, with 66.50 just below it. And then we'll see if we fail off of the upper line of this longer term downward sloping fork. The key line, I'm going to change my key line in the sand from the 49 down into the 45. And I'll show you on the composite, on the profile, but that's where we break back down below the upper line, the lower line of the upward sloping fork, the opposing fork. So if we get below that, we could get a move down all the way down here to 36. And we just have to watch what happens this morning. We're currently, holding above the year open right now at 20.55. So it's going to be an interesting day. Is it a turnaround Tuesday? I don't know, but we certainly had a strong trend up. We got outside of this. We basically, I said that we were expecting rotation for a couple days inside of this blunt area down here, and we basically took it right back, in one day. I was a little surprised about that, but you can see that the buyers stepped in right here at the 27. I put a new micro composite in because I wanted to see this whole area from where we accepted this value here and worked our way up until we failed off of that 2110. And you can see out of all these days, and this starts from October the 16th through to yesterday, the highest price is down here at 25, and that basically was the buyers coming in yesterday, accumulating and then pushing it up, and the inventory on the sellers running out, and ran up through right up into testing the key line in the sand above the 49.50, but more importantly, it also tested this 51 1/4. Remember that 51 1/4 is the value area low of the microcomposite that runs from February 5th through to August the 19th, and currently we're back inside of that value area and trading at 56. The value area low from the area of where we tried to hold value just before we fell out of it is up here at 54.50. But really, you got to watch the 51.25 and, obviously the 55-year open. As long as we stay above that 55, we're back in a bull year. Targets to the upside today, I'd be looking at this 57.50 with resistance coming in the 60 area. 59 to 60 area. If we get above that, then I think we get a move up into the 66.50, 64, 65 to 66, and then possibly even push through to the 71 to 75 area. And of course, the big destination up here is the two composite high volume nodes. We have the 78.50, which was the composite VPOC. It shifted back up to 84. It's been going back and forth. It's shifted 3 times now between 84.25 back down to 78.50, now back up to 84.25. So if they make a run for it, we could get another shift, and we'll have to pay attention to that when it comes. Below 49, we're inside the range yesterday. I'd be looking for them to come down and take out the naked close at 48. And then I'm putting my my key line in the sand at 45. And the reason I'm putting it at 45 is, we could just dip back in here, close the gap, find buyers, and rally again. But if we get below that 45, that puts us outside of the larger upward sloping forks lower line, and I think we're going to come back down into this area again. So I'm shifting my line in the sand from 49.75 down to 45. Does that mean I'm not going to pay attention to 49.75? Of course I am. It's just not going to be my key line in the sand. I'm not going to get biased to the downside until we get below 45. And below 45, then I'll be thinking for a move back into the 36, as my first target, but more likely coming back down here into the 25 and 27 area and fully auctioning this territory. Below 17, I really start to think to the short side. 1750, but below 11, I'm definitely going to get short, because we'll come down and test that week low at our weekly low is down at 98.50. All right, so let's take a look at what's happened overnight. Oh, look at, we're back in a bearish here. It's going to be like this, I think, all morning. They're going to fight this level right now. So right now, our overnight high is up at 59.25. Let's take this off because we don't need that. Overnight high, 59.25. And we don't need this. And our overnight low is 45.75. Just above where I've got my new key line in the sand. And our overnight VPOC, don't think it's going to shift, is going to be 55.50, right near the year open. All right, so currently right now, we're below the year open, but we're above value and above range. If we hold, above here, open above range and above value, I always have to look for the possibility of seeing initiative buyers stepping in and moving us up. But if we get two-sided trading, I'll be watching for that 51.25 to be tested. Of course, the range high at 51, and then below that, I'm targeting 49.75 as my first target, and of course the gap close at 48. And then I'd be looking for them to push through to the overnight low and test this 45. Below 45, it's, we get into this thin area of the profile all the way down to 32. So you can use the 42.50 as an acceleration to the downside. And I'd really be targeting the value area low at 40.50. But in between there's this We don't need this right now. There is this 41.75. So I'd be targeting this 41.75 in front of the, I would actually move this up to 42.75. 43. Yeah, that looks better. And then if we come down here and we don't hold the value area high, if we get back inside of value, your first target is the 36. Now, our 20-day ATR target is running right now at 25.84. So our downside ATR target today is this 33.50 area, and it's just above yesterday's VWAP and midpoint. So I'd be targeting that, and I'd be using this 32 area as another trade area, and then below there, there's really not much there. It's like I said, we get into this blunt area right here of undetermined fair value. I'd be using the 29.75 as another trade area, and then if we get below yesterday's VWAP and below this 29, I think you got a really nice trade into 25, but use 27 as your first target, 27.25 with 25 naked VPOC, and then below there, a move down to this lower distribution value area low down here at the 19. You've got the 1750 where I start to really think to the short side. Our open yesterday was 16. I'm going to mark it as a trade area. You know what I'm going to do? I'm going to move this down so it encompasses this whole area. I think I'm going to put a double one in here. I know I don't do this very often, but this area is pretty thin. I don't want to be long unless we're above the 19, and I don't want to be short unless we're below the 1750. So this becomes like a 2-point slush area that I just don't want to. I just don't want to do anything in the middle of it. I do above and I do below, and then below there I'd be targeting the 1450, and anything below there 11. And this is going to be my next key line in the sand. And then below that, we've got the gap. Our week open at 0650. Is that right? Yeah. The 04.25, 99.50, 98.50. 98.50 is our week low. I'm going to change this. And then below that, we got 95. Based on our weekly high so far, which is our overnight high at 59.25, our weekly ATR is running 68.60. So our downside weekly target is all the way down here at 1990.75. Don't think we're going to get there today, just pointing it out. Okay, to the upside. If we hold above 51 or we dip down here and break back out, before we take out the overnight low, I'll be looking for initiative buyers to step in or responsive buyers to step in down here and take us up through to the overnight high, take out this naked VPOC at 56.50. Get back above our year open and take out these targets. The first area of resistance comes in right at the overnight high, but I'm going to use the next little CLVN up here at 60.75. And then above that, this is no longer valid. I'm going to use the 64.75 as a target. Now, our weekly ATR target, based on our week low, is off of the 98.50. Our weekly ATR is 68.60, so our weekly ATR upside target is 67. But based on our overnight low of 45.75 and our 20-day ATR target, our daily target, okay, happens to be above our weekly target. So if we get above the weekly ATR, we got to start thinking trend scenario and a continuation up into that 78.50 area and 84 and a quarter. So we've got the naked gap at 69 and a quarter. So if we get above this, we still have room for extension up into the 71, and then we can start thinking possibility of a trend setting up for the day and a move higher. I mean, it was pretty strong buy-in coming in. They are fighting the year open right now. My main hypothesis is a dip back inside of here, possibly down into the 45, and then a slow grind and just chop. If we get below the key line in the sand, then I'm looking for a slow grind down to test the value area, inside value area. I'm looking for a turnaround Tuesday and a move all the way back down and take this whole day back by coming back down into the 25. But as long as we hold above the key line in the sand, rotational day with an upside bias. Below that, I'm looking for a test of value. And once inside of value, I'm looking for a turnaround Tuesday and a move down into the 27-25 area. Possibly finding some responsive sellers down here at the 32 area, just below the ATR. Pay attention to the overnight low and whether or not they get inside of the range but fail to take out the overnight low. That will be a good key for a breakout trade above 51 and a quarter and a move up through to some of these upper numbers to the upside. Taking a look at the Renko right now, you can see that our Keltner center line is at 55.75, one tick above our Globex VPOC. We're currently below it. A move down to 52.75 will test the the Globex VWAP, and below that, if we don't hold there, a move down to test that 49.75 area. Our lower Keltner line sitting at 49. This will actually probably be somewhere around 48 by the time we get to it. If we get back above the year open, above the Keltner center line, a move up to test the upper Keltner is going to bring us up into that 61.75 area and test some of those upper levels. Quick look at gold. Gold is still showing some weakness. The balance is above us at 88. We've come down and made an overnight low at 75.60. I'm still looking to see if they come back down and test the 73.40. A break below that, I'm going to get short into the 63.90 with possibility of continuation to a much lower number. If we come down here and bounce off this, I might take one more swing trade long off of that number. back into balance up here into 88. And then anything above 1100, I'm also going to get long and for a run to the 08 or 07 and 14 area above. But still, it's going to be tough trading gold right here in this area of the profile. Doesn't give us a lot of areas to trade to in terms of price acceptance. So they're slowly working their way back down into testing this low value area, price rejection area at 73.40. And if we can't hold, the first target below is going to be 67.90 and 63.90. So that's going to be it for our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.